Okay, in this video we're going to go over some of the other charts from the other people that I follow and try to learn from. One of the things that really convinces me that this market is still going to tank is what Cobra put up on his blog, which is the institutional buying and selling trend. You click on this chart and you see this is some major distribution that they are having right now in this month of May. This is the red line. They are dumping this market big time. On top of that, they are not buying. The blue line is the accumulation. They are not buying. This clearly tells me that the big boys are still dumping the market. And until I see this kind of hook back up and this kind of turn back down, showing that they're not selling anymore, that would, kind of give me an idea that, hey, they're going to get back on board and they're going to rally it back up and maybe put in a final high of 11,800. I don't know when that's going to be. Have no idea. That June 25th date, that could be a low for all I know. We could go down all the way into June and then rally towards the end. Maybe that's the turn date. I don't know. So go to Cobra's chart and, check out this chart. Go to his blog and you'll see it there. As well as, look at this. This is another scary one too. Now this is the liquidity that the Feds put into the marketplace. Look at last Thursday. They are sucking money out of this thing. As you can see, all during this big up move right here, they were pumping money into the system. Here, they are taking money out. This is not a good sign. This is horrible for the bulls. This market is not going up. Not yet, at least. Okay, let's go over some of his charts as well. This one here I like. It just shows a different view. Same thing here. This is the SPY's short term, showing that we do have a hook here, indicating that we could go up Monday as well. As you can see, it's pretty oversold there. And I think we're going to go up and put in, again, the same scenario here. I think we'll go up and turn and go right back down. When you look at this right here, you can see here that there's the gaps right here, which I believe will be filled. And I think we're going all the way up to here to fill that gap right there. So I think that's the larger time frame gap that we're gonna go to Monday or Tuesday. And okay, so this is just one of his charts. Let's see if there's some others that I like. Okay, here's the SPY again, showing the huge gap right there. I think they'll easily go to that one, and I think they're going to go get this gap right here. I think that's about it as far as they're going to get. It's all going to be about the 60-minute chart again, folks. When that thing rolls over and the dailies, if the dailies are still pointing down and we haven't got a cross back up, the market is still going down. There's just too much overhead pressure on it. Same thing right here. Now look at this. This is the SPX right here, clearly showing it's still pointing down. We're below the 0 in the RSI. And the weekly chart, this is his weekly chart. This is showing where gold could possibly go back here and hit a trend line as well. That's his gold chart, which looks like about 1140 range, possibly. I don't know. I don't really follow gold, so I'm not going to give you any advice on that. But here, he's drawn a trend line in here that is clearly broken on the weekly trend, and it has not went down. Now here's this same line that Cobra has in here. Now it's not showing what it is, but I suspect it's the exact same one as on the Chart Pattern Trader guide. Coming in at 988. I think that is our target. Just makes logical sense to me as to where our target is. Okay, and we're getting ready to turn back up. I mean, as you can see, we're trying to hook here. So I believe after that we're tagging this, I believe we'll probably hook back up and then go with a rally. But as you can still see down here, it's still pointing down, so it needs to roll back up. But I just don't see it happening next week. I believe we're going down again next week. Let's go over here to Tony. Tony's charts here. Tony Caldero and his 60-minute charts. He's an Elliott wave kind of guy, and I like watching his stuff too and trying to figure out what he's got going on. He's got an A move down, a B move down, and this is a C move. Well, if this is a C move, you can pretty much assure that C is going to go deeper than the A. And the A, if it started here, from here to here, from about 1220 to 1065. That is what, 55 points or something like that, or was that right? Or no, 155 points. So that means 155 points from this, which puts it at approximately 1010 or 1015 or something, which I think it will go lower. And so we scroll down here on his charts as well. You can still see, even on his, different MACD ranges. Still same thing. These are not hooking back up yet. You're still clearly below the 30. This thing is not done selling off. This is his daily chart. Looking at his weekly chart, same thing. Look here. This is the first time since March. This is real important for you to see that it's the first time since March that we've closed below these moving averages. These upper head moving averages, they're going to be huge resistance, and they're really going to stop this market from turning around and rallying real hard back up. You look at his RSI, and it's below 50 and pointing down on the weekly basis. This is still very bearish. You look here at his monthly, we just crossed the 50 mark on the monthly. That is bad news for the bulls. Okay? Same thing here. It's not quite hooked back down yet, but there is a little drag, a little delay in how long it takes the monthly to turn. Let's move over. Let's see. We already looked at Shanky's charts. Let's look here at Kenny's charts. Kenny's charts kind of shows that this is his 30-minute chart here. If I scroll over a little bit, you see that's the SPY 30-minute chart. And you can see the same thing right here. You can see that gap from where it opened here, where it opened here from where it closed right in here. That's about 115 to close the gap, and to hit the lower bottom of it is about 1108 or something to go to the bottom. But generally, I think once they hit the bottom, if they go up into it, they'll go on up and close it, I do believe. Okay. So same thing. We're under all of these moving averages. So you got monthly, weekly, daily, all putting pressure on this. The only thing that's going to push this up here is the 60-minute chart. And you can see on the 30, it's already coming up here. And so I believe it's going to come up here and roll back down. And that'll happen Monday or Tuesday. Going over to Dan Eric's. Kind of a similar thing here. And this is looking pretty ugly. On the daily here, you can see we closed below this line that we haven't been below since March 6th of 2009. First time. This is not good news. And that is the 200 moving average there, which comes in at 1102. That is not good news, folks. All of these charts are showing me bearish, bearish, bearish. They are not looking pretty. Okay, that's enough of the charts. This pretty much gives you an idea of what I'm expecting. You can go check out all of these people's charts. They're on my blog roll as well. Let's go over something else here that I wanted to show you. Someone sent me an email about this site called BAM Investors. And you can go to it, baminvestor.com. And this is a little scary, because they are claiming a crash next week. I don't see that happening down to where they're talking. They're talking about 7,000 on the Dow. And they claim to be pretty accurate. So I don't know. You can go check out their site. But I looked at their Twitter feed, and you can read their Twitter feed right here. It's pretty scary. It says we're at 770 next week and below October 2008 low the second week of June. If that's the case, then the low could be in at the June 25th date from this fake print or this Wilshire chart that I got right here. If you remember, this is a Wilshire chart showing about 7300, and it's showing a date of June 25th. But remember, I got this chart back in March. I know you can't see that right there. I will zoom in on that and pull that down for you. But again, June 25th. Now I got this back in March, so something is up with that. So maybe that's the low. I don't know. If that's the low, it's going to be some panic selling. So keep that in the back of your mind. And I think that's about it for my weekend update here. So I thank you for stopping by and listening to me rant and rave. All right.